There
And
we
we
are.
are live.
Here we go.
Never a
Live.
dull moment here.
Yes,
Live
live
from
in
Paris.
action. Bruce
Live
landed
from
in
Paris.
Paris. Here we go.
Yes. And
Fantastic.
Dublin. David and I are on the same side of the world again.
Yes, it's 10 a.m. here. What time is it for you in Paris?
It's 11. That's why I was messaging you actually quite a bit because we're an hour ahead of you, I guess.
There we go.
Yes. Um, can you still see me?
I did right before you asked, and now you're
Okay.
on a black screen.
All right. Well, give a credit to our lovely TV host here for 1 second. Go ahead.
There we go. So we are going to bring you the best in finance. We will be breaking down and decoding these current events. I know everybody saw this bridge collapse yesterday. Nobody understands how or why it happened. Um, the Bitcoin markets have been booming the last few years, months rather, and even all of last year. If you got involved early January 2023, I mean, you're really sitting in disbelief. You're at a point where you feel like a genius.
Well, we are
And
yes, and we are live on Smart Money Culture TV.
yes,
There on your TVs in Texas and Louisiana. Thanks for joining in. Our main man there, Fly Mackey, the man with the plan, putting that together. So we're doing a number of things out here in Paris. Of course, actually, you can see. Can you see the Eiffel Tower? Can you see it? Kind of.
can't make it out.
Really? The Eiffel Tower right there. So we're going to be
Nice.
doing a number of things here, including Paris Blockchain Week. So that's going to be a lot of fun moving up here. I have the family here, so that's pretty interesting. We have, as David was saying, there is a lot going on. Of course, big news coming out of Russia is Russia has basically said that the security person in charge of security has said that the U.S., U.K., and Ukraine did the attack. So, whether or not you think that is true or not, or whatever, that's big because, of course, the ramifications, if even the fact that they're saying that is it can get pretty dicey. As you know, of course, we also saw this collapse of the bridge yesterday, which was as well just
Very
horrible.
questionable. Horrible
Well,
for sure.
a lot of people are saying it's questionable. I don't know if it's really questionable or not. We've never seen. It's kind of like it is reminiscent of the Twin Towers coming down because we have never seen anything like that really before.
Yeah, it
So,
just collapsed.
yeah, the Twin Towers collapsed and they didn't make any sense, but we were all kind of like, well, I don't know. Like, never saw anything like that before.
Yeah. No,
So,
these big boats, you don't need a driver's license to drive a boat because it's so easy not to crash. And if you do bump something, you're usually not going too fast unless it's a real freak accident. But yeah,
okay.
to watch a big boat float into it, man, feel feel terrible for everybody that was harmed.
Yeah, it's absolutely horrible, and of course, there's lots of stuff swirling all over the internet. I will say that they try to all the stories down so quick. That's always kind of a warning. And then, of course, you have the mayor there who is going on about it's all about it's a racist bridge or something. It's pretty funny. So that's all kind of funny. I don't know. We'll play some more videos on that. Obviously, I don't have my computer in front of me today. The Bitcoin market has taken a little bit of a pullback. We're in a pullback. Of course, KuCoin gets the founders are indicted yesterday, and they say a multi-billion-dollar scheme or something like that. Um, who knows? They went after Binance first. The question I was asking about that is, is that I wonder if, because I like the other ones, like BitGet never let Americans trade. You know what I mean? So I wonder
Yeah.
if they'll be shielded like that, as well. I guess we'll see. We'll see.
Yeah, it's pretty
How
harsh laws that they put on Americans. Americans want to be in the markets, and they're being held back by this overbearing government, in my opinion.
Oh, it's out of control. And let's face it, it's absolutely out of control. What's going on? 100%. So that's pretty interesting. Gold, actually, the interesting part, if you can share your screen, you just go to Google and Google gold futures and look at that spike that just happened. It really just happened. Pretty interesting. Are you able to share your screen?
Yeah. Investing.com. I'm going to pull it up here.
So, of course, these are risk assets. You able to pull that up or no?
Yep, it's coming up.
Okay. So I think that little pullback on the markets. Of course, KuCoin had the biggest drop, their own native currency there. Not gold coin, just Google gold futures. I can't see your screen well enough.
It looks like gold futures.
If you just Google. Okay, well, there you go. That spike looks right. So that's pretty interesting. If these types of assets, of course, the U.S. dollar, they are printing the mess out of the U.S. dollars. Those are we're getting inflated so badly, so harshly. You can pull that down now. And these different types of assets are going to continue to go up because, of course, people are looking for ways to get out of the dollar, get out of something. Of course, the central banks and the dollar have really been where they've been able to fund all these wars and everything else. And of course, now every time they make money, of course, they're just diluting everybody. They're diluting everybody. And so like that bill that just got passed, $1.2 trillion. I was telling everybody that cost everybody. It cost every American $3,500. It's a crazy number, $3,500 for that bill. So that's pretty crazy. Yeah. And so if you have your money in U.S. dollars, you just got diluted. And so that's what's as well going to push up these assets. But you look at Bitcoin, and one of the reasons Bitcoin keeps going up so much more is because it is gold. They can continue searching for it. They can continue mining for it. Bitcoin, there's like a finite amount, and now we had the guys on yesterday talking about all the ordinals and different things that they're building on Bitcoin. But Bitcoin is now becoming deflationary because we actually have more and more Bitcoin, more and more Satoshis being used in different, being tied up in different things like these ordinals. And if you look at some of these old Satoshi addresses, there's all these memes and different ordinal NFTs that people have just been sending them, and it's basically they're just burning the Bitcoin. And so we're in a position where it's deflationary, where it's getting to be deflationary, and that doesn't seem to be like that's going to slow down anytime soon. That Bitcoin ecosystem is just exploding.
Yeah, absolutely. It's interesting concept where the ordinal NFT gets attached to the token, and then it's no longer a regularly traded Bitcoin, and it's inscribed with information or a meme or a picture or some sort of information, and that is basically removed from your coin circulation, where you can't just dump it on the market, and someone needs to go and pick to choose and buy that particular ordinal NFT.
Yes. So it is, and then
Oh, you getting on the elevator?
if the
We're gonna lose you on the elevator, man.
then if the NFT
Definitely gonna lose
is,
you on
you know,
the elevator.
at some point those satoshis. No, you're not. It's just for a second. Don't worry.
That was
at
always
some point,
my niche struggle with.
Go ahead.
Well,
Go ahead.
buying NFTs versus buying the token, you can always dump your tokens on the market, and it's not as easy to sell your NFTs usually.
Well, the thing is that it's interesting, and another reason why this space is just blowing up is because, you know, those satoshis are always going to be worth something. So, like, you're always going to have something. So let's say that Bitcoin does go to $1 million, which I actually think more than ever am I convinced that this could happen. Then you're in a position where you might, those satoshis, even if the NFT ends up being worthless, it will never be worthless because the satoshis are always going to be worth something, and you can still spend them. You just maybe you don't want to because maybe it's worth something else. But that's another reason why. I mean, gosh, this Bitcoin ecosystem, man, it's crazy. I know I mentioned it the other day. I mean, I was sitting there with one of our friends in Portugal last year, talking about what we were most excited about, and both of us were talking about the Bitcoin ecosystem. Anyhow, so I think we're coming off our break here. Let's have our main man, Matt Dixon, the great Matt Dixon. Go ahead and you can add him.
Hello,
there
Matt.
He is. Sir Matt.
Hi, David. Hi, Bruce. Good morning. How are you doing?
Good.
I see you're on the move.
Very well.
I'm on the move.
Now we can see
it. Here in Paris. I was hoping to be a little bit more set up before the show, but I knew it might not happen as well.
That's okay.
I have the wife and kids, so I was like, let's just stay. Let me do the show, and then, you know, of course, the wife and the blah blah blah. So anyway, here I am. Anyway, go ahead. I'm sure you have lots of interesting stuff. There's a lot going on.
Yeah, so I'm going ahead straight away, sharing screen. Trust you can see that.
Yep.
So let's just start with some of the kind of fundamental drivers. We've been touching on this for some time now, and you know, we looked on the daily. This is the dollar index, and it's really important, you know, where the dollar's going to get a picture, an idea of where the market's going, because well, we can see here very clearly, just looking on the daily, we've got this overhead channel. Somebody asked me today on X, on Twitter, just asked me what happens if we were to break above this channel. Now, I'm just wondering what potential scenarios could break us above the channel. In other words, what could strengthen the dollar at the moment? So we've got a couple of things. So we've got GDP out tomorrow, and we're actually expecting quite a big decline. It was 4.9%, and they're expecting a drop to 3.2%. That's for the last quarter of 2023. So they're expecting a very sharp decline in GDP in America. So, you know, you can see in percentage terms, that is massive. So that will potentially, you know, if we were to get a surprise either way, that could sway the US dollar. But it just shows you that, you know, the US economy is slowing down, and we're now beginning to see that in the numbers. So got to be aware, and that kind of tells us why the US dollar has been declining. And we had not only this overhead resistance, which the dollar appears unable to break through, and we'll just go back to the short-term view on that again, just to see exactly how the US dollar has been rejected by the overhead resistance. And not only that, we've mentioned this a few times, we actually have triple bearish divergence, which happened 3 times, where we basically get higher prices on dollar index and lower peaks on corresponding RSI values. And so we've seen there that, I should move down slightly, that basically the US dollar keeps getting rejected from overhead resistance and it keeps pushing down. That's actually probably quite positive in the short term for risk assets if we do break lower. But the other thing we need to watch, I just mentioned about GDP, we also have PCE, which I think comes out Friday, personal consumption expenditure, which is the Fed's preferred measure of inflation. And they're actually expecting PCE to tick up a little bit. So I think the year on year, they're expecting to move from 2.4 to 2.5%. And I think that the core is remaining high at, I think, 2.8%. That's the expectations. So we've got to take note.
And that's the money that people are spending?
Yes.
Correct?
So that's basically, it is the Fed's preferred measure of inflation. So basically their target rate is 2%. We're way above that still. When I say way above in percentage terms, substantially above, more than, we're 20% above, more than 20%, 40% above the target rate. So that's not good that they're so far above the target rate, and yet we're seeing GDP falling off so rapidly. So this is the tightrope I've been talking about that the Fed are walking, that they have a slowing economy now, and they've got basically still elevated inflation, sticky inflation, not only sticky, elevated, but actually rising inflation. The last read we had of CPI was rising. The upcoming PCE on Friday is expected to rise. So this isn't good, really, for the management of the US economy. It's not a good situation to be in. But even so, because the Fed are talking a nice talk in terms of reducing interest rates, they say 3 times this year, which they're running out of time, but I'm sure they are going to reduce rates, try to stimulate the economy, keep everything looking rosy. So if they do, that means a weaker US dollar, and that's good for risk assets. And as I said yesterday, I think the sort of medium-term outlook for risk assets is actually probably quite positive. And that will be especially the case if we see continual weakening of the US dollar. And so I'll jump into Bitcoin to see where we are. In fact, before I jump Bitcoin, let's just go to dollar index. We've done dollar index there. So let's, go on to gold would be a good one. I know Bruce was just mentioning.
It's quite a spike we had this morning.
And even as we watch, it's actually pushing higher.
In percentage terms, maybe it wasn't so high, but it was just so fast.
Well, as we know, gold doesn't tend to move in big jumps and moves. So when you see something like this, the move we've had, it's quite a good move, and it tells us that inflation is a bit of a worry, and the gold price could be affected if we see higher PCE than expected on Friday. So because gold is that hedge against inflation. So I think there are definitely inflation worries out there. Gold is telling us that's the case because gold is very high at the moment. And if we see persistent, well, the thing is we are likely to see persistent inflation because they seem to be hell-bent on keeping monetary policy relatively easy. They're dialing back on quantitative tightening, as we said, which actually means they're loosening monetary policy. So at a time when inflation is already higher than expected, they're actually loosening monetary policy, which is great for the economy short term, but long term, it's absolutely not what they should be doing. And they seem to be it seems as though they've got some sort of fourth mandate. They've got 3 mandates effectively about controlling employment, controlling inflation, maintaining market stability. And it seems like there's a political thing here as well, that they're basically hell-bent on maintaining the status quo politically, about keeping the incumbent in place, because they seem to be supporting the economy, which shouldn't really be their mandate. They should be focusing so much more on employment and inflation. They should be the real core things. And yes, market stability to some extent, but they seem to be diverging from what they should be doing. And that's not good long term, because they should really be focused on managing the economy, not managing the political situation. So
Yeah.
not happy about that at all. So that was gold. So we'll jump into Bitcoin. As Bruce was saying, we had a pullback on Bitcoin, but you can actually see here, this is just the 1 hour. In context, it's not much of a pullback. Yeah, we had an all-time high of 70 some. Well, actually, the all-time high was a touch earlier than that, wasn't it? Back here, we had a correction down, which I think was an ABC correction down that we can actually see here from the high, an A, a B, and a C down. Now, it could be that the correction isn't over, and we could have basically a 3 down, a 3 up, and then if that's the case, you'd then probably get a 5 down after that. So correction may not be over. We may have a little bit more volatility in coming days with these figures coming out with GDP and PCE. But at the moment, this little move here that we've had, now I'll just open that out, this recent move we've just had is very much a choppy, sideways, slightly downward move. That would normally tell you that short term, this is just a correction and that we should push higher. So I do think we're going to push higher very short term, I'm talking about here, on Bitcoin. So I think that's positive risk assets. So as I say, positive is short term is positive. I think medium to long term is positive, but we may see some volatility medium term. When I say medium, it's still in real terms, it's short term, but I'm talking about the next few days with these figures coming out with GDP and PCE. They're very important data points in America. We can see similar sort of pattern with Ethereum here. Again, some kind of corrective pullback. And I'll jump straight into Solana because that's one that I've been really following a lot. There's a couple of actual possibilities, and I've got two completely separate charts. I'll show them both. So this was the triangle that I've been talking about for days, and I said following the triangle we'll get a break higher. There's actually another potential way to count this, which I'll show you in a moment from an Elliott Wave perspective. There are always other probabilities, and you have to assign probabilities to the likely outcomes, to the likelihood of these being the actual correct counts. There's never 100% positivity or never 100% reliability about any prediction, because they are just predictions with probabilities. So this one, as I say, I expected it to be a break higher from the end of the triangle. That's exactly what happened. I actually traded this, did quite nicely. We then I closed my position, and it's pulled back as expected. So potentially, I'm expecting the thrust from the triangle will be a fifth wave to take us above the previous local high of the third wave, which was around the sort of 208, 209 area on Solana. So I would expect the thrust to take us above that. So if this is the correct count, being a triangle, then what we just had, I think, is a small wave one higher. We're pulling back in wave two, which may or may not be complete. It could well be complete here. And then we're going to continue the thrust higher, because this thrust in the fifth wave should itself be made up of 5 waves. So we've had 1 up, 2 down. We'll expect a 3 up, 4 down, and 5 up to take us quite a lot higher with Solana. But I will just jump to the alternate count. This is the potential alternate, and you can see it is a bit different. Instead of being a triangle, I've labeled it as an A down, a B up, and we could potentially have a C down. This is actually my least favored of the two. But even so, with it being ABC, it's still what's called a corrective count against the trend. So the overall Solana trend would still be to the upside. So even if we correct a little bit lower on Solana, I would still expect the overall trend to be higher. So we could potentially correct lower, then push higher. But either way, whether it's the previous triangle scenario or this one, so the previous triangle is this scenario, or whether it's the one I just showed you, which is just a simple ABC, either way, following both of them, you expect more upside to come above the previous local high of that 209 sort of area, almost 210, wasn't it? So I'm expecting positive things but just short term, there's a little bit of uncertainty. There's a couple of probabilities that could play out. So this is why you need to not over leverage or over risk on any particular trade that you ever take. Because as I say, there is never certainty in trading. There are only probabilities, and you have to keep in mind the various probabilities to try to manage your risk reward ratios. This is an interesting one, isn't it? I'm sure you've been watching this, haven't you? Bruce and David, XRP, Ripple, the SEC.
Oh, yeah.
Taken, I think they've, what is it, almost a $2 billion fine they're levying against Ripple.
It's crazy. It's crazy. It's like, it really makes you kind of like ashamed that this goes on in our country that we call home.
There seems to be a very, very serious bias here by Gary Gensler, and
yes.
It's something which I hate it when people get political in the financial world, and I think it upsets. And that's what I'm saying about even the Fed. They seem to be taking decisions based on political preferences, and I think that's here with the SEC. I'm not quite sure. I think they should be recognizing the tremendous innovation here that's going on in the crypto world, digital assets, the tremendous opportunities and possibilities that it brings in terms of increasing productivity. Blockchain and productivity go very much hand in hand. AI, and a lot of these tokens are focused on AI, and they're really innovative, developing the cutting edge of AI technology. And this is such a positive thing, and yet they're being hampered by these ridiculous millstones around their neck, I think you could say, with the SEC throwing fines out. Not giving any clarity. Regulation is supposed to give clarity so people know how not to break the law, how to stay within the law, to create advances in productivity, advances in technology, advances that benefit the human race as a whole, even America as a country. And they're not giving that regulatory clarity. So they really have something to answer for here. And I think they need to be held to account. And I don't know quite how that should be done.
I don't know how that's going to happen either. It does need to happen. I mean, Gensler is like, he's like, he's all over the place. And as you said, it appears we really operates politically, it appears. And even as well, it appears market manipulation from the highest levels.
Yeah, and again, that needs to be controlled. Anyway, I'm probably ranting a bit here, but it's just what I see going on.
Me too.
So let's take a look at oil. As you say, oil for the time being has held above that $80 level. I still think there's probably, we had the Security Council, which again I ranted a bit about yesterday, about what I see as potential bias there. There doesn't seem to be any particular breakthrough about any longer lasting peace in the region, any cessation of hostilities or anything like that. So there's always that risk that things could blow up at any time. And so oil is a barometer of what's happening in the world geopolitically, I think, very much. So at the moment, it's really stuck in this range. It did break above 80, but it doesn't seem to be breaking anywhere very fast. It doesn't seem to be actually going anywhere. So we're seeing the world economy slowing, which is potentially a negative for oil because there's less consumption. We're actually coming out of winter. So again, you'd expect there to be less consumption, less heating required, all that kind of thing. So, and with the US economy and the world economy beginning to slow, and probably the rest of the world more so than the US. And when we're talking, this sort of brings me round to when we're talking about US dollar, the US in particular always seems to be very inward looking about what's going on in the US. But you do need to bear in mind that the dollar index is really measuring the dollar against a basket of currencies. And so the dollar cannot be seen in isolation. You can't consider the dollar in isolation and just say, oh, we need to look at what the economy is doing in the US. Because it's very much a relative thing. And we're comparing here the dollar with the world's major currencies, particularly the euro. And we do know that the Europe are very much in the doldrums as far as growth is concerned. And so, we're seeing problems with the euro, inward pressures and stresses within the euro. So you'd expect the dollar to stay strong against those. So again, it's just a relative game. We need to keep that in mind, particularly, I think, within America. The dollar is not an island on its own. It is actually just relative to other currencies. So we do need to keep that in mind.
It's continued to, it's crazy. I feel like the decline, I feel like would even be faster with everything going on. It's the next even 6 months or a year are going to be really interesting.
Yeah, but it is hard to see. I mean, I do see, and I actually listen to a lot of what's going on in America from people in the know, and they're talking about how the dollar is expected to fall through the floor. But you have to bear in mind, as I say, that China is in a mess. They're massively trying to stimulate their economy and keep things moving, but they're in a mess financially.
Yep.
Japan, Europe, UK, rest of the world basically is really struggling right now. So even if the US were to stumble, then the rest of the world is also stumbling. So I just don't think there'll be major moves necessarily in dollar index unless we see some big geopolitical thing blowing up.
It's a really good point.
Yeah, we see here SPX, S&P 500. We've actually stayed, and again, I still think that the move down so far is corrective. So I do actually think that short term, we're probably still going to see risk assets move up. So I do think that correction we talked about with all of them really, with Bitcoin, just flicking back to Bitcoin, this corrective little move here, following a correction, this is kind of what you would call a bull flag. So you've got the flagpole here, you've got a kind of flag waving in the wind. It's called a bull flag because the expected break would be higher. So we do think that short-term assets are going to move higher, and that kind of looks the case here where we look at SPX, the S&P 500, because again, we've got very much an impulse high. You see all this green movement, impulsive movement to the upside, and this movement down from that recent all-time high has just been very, very choppy and corrective. I think we had an A, a B, and a C move down. So I do think we're probably going to be breaking higher sooner rather than later with the SPX, the S&P 500. So I think today could well be a positive day. And it could even be that we get some positive news out of that data, those data points I mentioned in the next few days. GDP, they're already expecting GDP to fall off a cliff anyway. So if it were to come out in line with expectation, that's not going to be negative for the market, even though it's dropping from 4.9 to 3.2. That's not going to be a shock because it's expected. So if it comes in at 3.2, the market won't take that badly. If it were to come in even maybe, if it's come in line with expectation, I think that's probably a market positive. It would mean there's no more further upward pressure on interest rates from that. But it would mean, 3.2 is still a solid growth rate. So I think if it comes in line with expectations, that's probably a market positive. So could be another good reason for risk assets to push higher. And then again with PCE, if PCE comes in line with expectation, then again, it's not going to be a major negative for the market. It does still tell us that the US, the Fed, have a problem because inflation is higher than expected and growth is slowing. But we already know they have a problem. So it's already priced into the market. And we are still being told, as I say, the Fed are saying they're going to lower rates 3 times more this year. So that being the case, that's positive for risk assets. So I think all in all, it's reasonably positive. There's a bit of a down day overall in crypto. You can see here on the right-hand side that they're mainly, most of the moves are negative. Just passing by eBay there, I see eBay is up 0.6% again today, so that's quite nice.
Of course. The mighty
solid eBay.
That's
and
right.
It's actually I've got a date now for eBay. We're actually bringing out the upgrades on Tuesday the 2nd. The reason it's not coming out on Friday, we were originally pinpointing Friday or marking out Friday. But Friday is Good Friday. Monday is a bank holiday in many parts of the world as well. So we're just waiting till the bank holiday is over and coming out Tuesday with major upgrades, major partner announcements and collaborations. And I think April is going to be a really good month. So we'll do a feature on eBay hopefully next week, if that's okay with you guys at Impact Money.
Of course, we're really looking forward to it. I mean, eBay is one of our all-time favorite platforms, and of course, it's highly effective, very effective AI platform. These AI tokens are going absolutely insane as well.
Yeah, now's a good time. We're just getting a little bit of a pullback in the market. It'll be a great time to come out with these upgrades. And then we're migrating to the Solana network later in April. So that would be amazing because we'll be one of the first big AI tokens on the Solana network. And as you know, Solana has such amazing characteristics. I think it'll be great for eBay to do that. So we're looking forward to that later on in April. Looking at the meme tokens, that in general, Doge is yet again showing positive 0.3% positive today, whereas the rest of the bunch are fairly negative. We've got Book of Memes down 6% as we speak, Bonk down 4%, and so on. SHIB down 0.62%. So slightly negative on the meme coins, slightly negative overall, but I think the outlook is actually positive. So I think this is maybe another buying opportunity. Again, we're not financial advisors, make your own decisions, do your own due diligence, but it may be another buying opportunity. It may be another opportunity to do some dollar cost averaging, possibly pick up assets with this pullback that we've seen. And
I'll tell you what, the dollar cost averaging is one of the most successful strategies. And I'll tell you, in crypto, and as long as we've been in, that is probably the most successful strategy, of course, other than just buying at really low prices and holding.
Yeah, I mean, absolutely. That's exactly what dollar cost averaging is about. You obviously buy pullbacks. You don't normally buy highs. You're buying every pullback in the market, and you never know how deep a pullback will go. So you can buy multiple times during a pullback. But assuming you have you have confidence that Bitcoin is an asset for the future, and I think we have confidence now, especially as we have the ETF, now live. And I don't know if we mentioned it yesterday, but I think I did mention it briefly, but the outflows from Grayscale will eventually stop. The reason for those outflows was because massive profit taking, because people were actually able to buy Bitcoin at a massive discount, somewhere around 50% discount. A while back in Grayscale. So people were bound to take profits there, and there's going to be continual profit taking, especially when Bitcoin is bouncing around all-time highs. But at some point, that profit taking will end, and we're seeing when that happens, by the way, Grayscale will lower their fees, no doubt. They'll continue to lower their fees dramatically to put them to make them competitive with the other ETFs which are out there. And the other ETFs are still showing positive inflows. It's only Grayscale where they saw these outflows. So eventually, I think the outflow from Grayscale will end. And I also think another big factor is that a lot of these pension funds and institutions, as I think I mentioned yesterday, then it takes time for the mechanics of them being able to allocate to a new asset class like cryptocurrency, like Bitcoin. So it takes time for them maybe to have a scheduled board meeting to actually have the agreements in place to be able to do this. But when they do, the floodgates opened when the Bitcoin ETF was approved, the institutional floodgate. But even so, they have to get all the agreements in place to be able to do it. There's one influential lady, I think she's the CEO of Bitwise, came out and said that if the institutions were able to allocate 5% of their portfolios to the Bitcoin ETFs, to Bitcoin, then the Bitcoin price would be, I think it would be well over $3 million, she said. I think she said $3.4 or $3.6 million per Bitcoin. That's with a 5% allocation. So,
that's
I mean, that's
crazy.
phenomenal.
It's
It really
absolutely
is.
phenomenal. And that was, again, I talked about it in the early on in the show. How are you? And that was, because we're actually entering even a deflationary. I mean, never mind the ETFs are making it deflationary by sucking all of the coins that they can off the market, but as well, you have all of these ordinals and all these things that are being built on chain that are locking up more Satoshis and more Bitcoins as well. And so it is, I was actually, after the last few days, even more and more convinced that this thing is really going into the seven figures. I think that it could really go into the seven figures.
Yeah, it used to be. I mean, it's amazing how it's come along. I mean, I know somebody who at their birthday party. This was in 2000 and when was this? Was it 2016? Was it? I think it was when Bitcoin price was around somewhere around $1,000. So I can't remember precisely when it was. But this is a true story. Somebody who had Bitcoin, a young boy had Bitcoin in those days, and was about to blow his candles out on his birthday cake and made a wish. And they said, "What's your wish?" And he said, "Bitcoin 10,000." They said, "You're not supposed to actually tell people what your wish is," but it soon came about that Bitcoin was well above 10,000, and it was, for those people who got in when it was just a few dollars at the start, some people even a few cents. They couldn't have imagined it would get to where it is now. But this, as we've said over and over, it's just the retail phase for 0 to 69. We're only just above that now at 70,000. Once the institutional thing really gets in gear, and this year could be the biggest manufacturer bull run we ever see, because it's election year, because they don't want the economy to go bust, because they're going to be printing money. This could be the biggest manufacturer bull run we see for many, many years to come. And so I think it does make sense to be exposed to some assets that have limited supply, like these cryptos, and ride the wave.
Well, and the thing is that the other when you're explaining it to people, and again, we're not financial advisors, okay? I mean, obviously, we're this is what we love to do. We're doing it, but we have to say that. But if a company was growing as fast as Bitcoin, they would split their stock over and over and over again. And that's how you do it. And you have a situation with Bitcoin not able to. And people say, "Oh no, you can do it." Well, no, you can't. If you do something like that, it'll be a different coin, and that old coin is still going to continue. Bitcoin is still going to continue. People are still that's the mothership right there. And so that's something that really the world has never had before. That we've never had an asset where there was such a small finite supply, period, end of statement. It's never going to be more than this. And then even gold. I mean, we talked about it. They're going to mine gold in space one day. You know what I mean? I'm sure there's going to be lots of gold, everything out there. I mean, it is what it is. I mean, of course, it's a long time from now and whatever. But I mean, it does play into your psyche. Like, do you want each of your kids to have at least one Bitcoin? Do you want, you know what I mean? Do you want at least one Bitcoin for, whatever? And there's
Maybe
ever. What's that?
Yeah, I was going to say maybe instead of talking Bitcoins in future, maybe people will be talking Satoshis, because obviously
100%.
every Bitcoin is divided into 8 decimal places. And we don't quite, we just say 8 decimal places. Oh yeah, that's going to be a small amount, but it's actually 100 millionth of a Bitcoin. When you go to 8 decimal places, 100 millionth of a Bitcoin. So if Bitcoin were to be $1 million, then that means a Satoshi, I think, would be 1 cent. So it's still, that's if Bitcoin was $1 million.
And we're all sitting here saying, I think it's probably going there. I mean, when you talk about those numbers like 5% and these moving in, and then of course they're just inflating the money. It's all over the world. And the one thing that all these countries have in common is, of course, they have a common central banking cartel. Okay, so they're all connected. They're all doing the same thing. But yeah.
So instead of giving your girls, I have no idea what you're giving for their birthday, Christmas, but instead of giving them $100, when Bitcoin is worth $1 million, you could give them 100 satoshis, and it'd be the same as, or whatever, an amount of satoshis, because a lot of companies, by the way, were really forward-looking and actually paid their employees in Bitcoin many years ago, and that was, the employees who were paid in Bitcoin. I guess most probably cashed it in.
Yeah, it's probably better than buying bonds. Sometimes the relatives will buy the young ones bonds for their birthday and save it for when they're 16 to buy a car or something. But it might be better to buy satoshis.
You think?
Yeah. And when you talk about bonds, I mean, I don't think you're talking about treasury bonds, but if you were talking treasuries, the big issue, that's actually one of the things that's got banks into trouble recently. Last year in particular, a lot of banks have gone under because they basically put their deposit money with this fractional reserve system. They put the deposits into US treasuries, and then as interest rates basically rose, when they rose, the treasuries fell in value very sharply. And so when people wanted to call on their money, effectively causing a bank run, they couldn't just cash in their treasuries, which are supposed to be risk-free, because the treasuries had crashed in price. And so it's caused a lot of banks to go under. And there's a lot of regional banks gone under.
I'll tell you what, I think this year we could have a lot of banks go under. There's this whole FDIC thing as well. I mean, I don't know if I talked about it on the show yet, but everybody thinks that their safest place to have their money is in the bank. Not people like us, maybe, but normal people. They think that if the money is in the bank, then it's safe, right? It's in the bank, and they think it's insured up to $250,000 and all this FDIC insured. Well, FDIC, right, as of last year, they only had 1.7% of all the assets that they were supposed to be protecting, 1.7%. And there's a law that was on the books that just ran out, sunlighted or whatever they call it, on March 11th. And that was there to infuse money into the banks when they needed it, and that finished. But even last year, they told the FDIC, "Hey, look, we need you to bail these out. We're just not going to mint the money for whatever reason why they did that." And so the FDIC bailed out the 5 banks that went down last year. They bailed them out, and now they only have 0.7%.
Yeah.
FDIC has 0.7% of all of the cash, your lovely cash that you think is insured. 0.7%.
Yeah.
So if we could see some major bank failings this year.
Yeah, the financial system is definitely in a very precarious situation, and even when you look at commercial real estate, big problems there. Obviously, a lot more people are working from home now. There's a lot more people don't go to the store; they order everything online. So commercial real estate is another big potential shoe to drop, and that could be the trigger that causes the next financial crash. I think 2024 will be the year that we see some big changes in the world, and maybe it's the year that CBDCs come out. So I think we need to have a proper look into CBDCs one of these days, one of these shows, just to look at the potential implications there.
The evil CBDCs, boogeyman, as I always call them. Yes, we do. Everybody's so scared of that. The CBDCs, the social credits, all these types of things. Although, I mean, we live in such a political environment in the U.S. It's really crazy right now. Even just using, they cut everybody off, your debit cards and everything else if they want to. Alex Jones, he couldn't use a debit card forever. He couldn't raise any money using that. But yeah, we do need to dive into those. I think I agree with you that 2024 is going to be it's lining up to be a pretty big.
Yeah. Well, what worries me is that I've not heard anything lately about CBDCs. And so when you hear nothing about it, it's gone really quiet, and you know how much government has been spending on creating CBDCs. When you hear nothing about it, that tells you something's brewing behind, and there's going to be a big surprise coming soon. So we really should look into them.
True.
Agreed.
That's
All
at
right,
the top
well,
of the
awesome,
hour
guys.
here.
Another great show. Live from Paris. I'll be here for a bit. I'll be hopping around some different countries as well. Hopefully, be a little bit more set up tomorrow. But I'm going to go and hang out with the family a little bit. Thanks, guys, so much for coming on. Great analysis, of course, Matt. Thank you, David, as well.
Yeah, thank you, guys.
We are signing
Pleasure
off.
to see you. Yeah,
Stay
signing
tuned.
off. See you tomorrow. All the best.
Stay lucrative.
All right, cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.